For years, people have been asking the same question. Why are houses still so expensive? You would think after mortgage rates surged, affordability collapsed, and home sales slowed down, prices would have come down by now. But instead, in many parts of the country, housing remains incredibly expensive, inventory is still limited, and millions of people feel completely locked out of the market. And that's because the housing market has a problem that goes much deeper than high interest rates. The real issue is that the United States simply does not have enough homes. And despite how many people talk about it, this is a housing shortage that no one has truly solved. Before we get to the video, if you're new here, my name is Elliot. I make videos about investing, the stock market, and I also share updates on my own portfolio, which is on the Robinhood app. If that sounds like something you'd enjoy, consider subscribing. I upload videos every 2 weeks. Now, when most people hear the word housing shortage, they usually think it just means there are not enough homes listed for sale. But the problem is much bigger than that. What we're really talking about is years and years of underbuilding across the United States. After the 2008 housing crash, home construction slowed down dramatically. Builders got burnt, banks became more cautious, financing became harder to get, and for a long time, construction activity never fully recovered to the levels the country actually needed. Meanwhile, the population kept growing. Millions of millennials entered adulthood, more families were formed, immigration added demand, and remote work changed where people wanted to live. And suddenly, the country found itself in a situation where demand for housing far exceeded supply. That imbalance built slowly over time. But during the pandemic, it became impossible to ignore. Mortgage rates fell to low levels, people rushed to buy homes, stimulus money supported consumer spending, and remote work caused many Americans to rethink where and how they wanted to live. Some people moved to different areas, others left expensive cities entirely. Investors also jumped into the market looking for rental properties and long-term appreciation. And because there were not enough homes available, prices exploded higher. Now, normally, when prices rise, you would expect builders to respond aggressively by increasing supply. And to some degree, that did happen. Construction activity picked up, new developments started appearing, and home builders benefited from strong demand. But even with more construction happening, the country still remains short millions of homes depending on the estimate you look at. And part of the reason is because building homes today is much harder and more expensive than many people realize. Land costs have increased. Material costs surged after the pandemic. Labor shortages continue to affect the construction industry. Permitting can take years in some areas, and zoning restrictions limit what can even be built in the first place. In many cities, it is still extremely difficult to build higher density housing even when demand clearly exists. So while everyone agrees more housing is needed, the system itself often slows down the ability to actually create it. And then there's another major issue that's freezing the market right now, the lock-in effect. Over the past few years, millions of homeowners locked in mortgage rates around 3% or even lower. That's an incredibly valuable financial asset. Now imagine you own a home with a 3% mortgage rate and you're thinking about moving. If you sell your current house and buy another one today, you may suddenly be financing a new mortgage rate at rates closer to 6 or 7% depending on the market. Even if the new house costs roughly the same amount, your monthly payment could rise dramatically. So what are many homeowners doing? They're staying put, they're delaying moves, they're remodeling instead of relocating. They're holding on to homes longer than they otherwise would have. And while that makes sense financially for individuals, it creates another problem for the broader housing market because fewer homes are being listed for sale. That keeps inventory tight, which keeps prices elevated, which keeps affordability under pressure. And this is why the housing market feels so strange right now. Home sale activity has slowed compared to the frenzy in 2021. Mortgage rates are much higher. Affordability is near some of the worst levels in decades. But because supply remains constrained, prices have not collapsed the way many people expected. This has created enormous frustration, especially for younger buyers. For many millennials and members of Gen Z, buying a first home feels farther away than ever before. Down payments are larger, monthly payments are higher, property taxes and insurance costs have risen, and wages in many areas simply have not kept pace with the housing market. In some cities, people who earn what used to be considered strong middle-class income still struggle to comfortably afford homes. And this is where the housing shortage becomes more than just a story. It becomes a social story because housing affects almost everything. It affects family formation, where people move, birth rates, retirement plans, and wealth creation. For decades, homeownership was one of the primary ways many Americans built long-term wealth. Rising home values created equity, and that equity helped families borrow, invest, start businesses, or support future generations. But when housing becomes increasingly unaffordable, that path becomes much harder for millions of people. And at the same time, large investors have also become bigger forces in housing markets over the last decade. Private equity firms, investment companies, and large landlords have purchased single-family homes in some markets to turn them into rental properties. Now, to be clear, investor ownership is still a small percentage of the overall housing market nationally, but in certain cities and neighborhoods, their presence has absolutely contributed to the competition for available homes. And this adds another layer of frustration for regular buyers who already feel squeezed. Now, one thing that's important to understand is that housing markets are also deeply local. There is no single national housing market. Some cities are seeing population growth and demand, others are losing population. Some areas have strong job markets attracting new residents, while others are also struggling. And because of that, housing conditions can vary dramatically depending on location. But even with those differences, the broader national issue of undersupply continues to affect affordability across much of the country. So what could actually help solve this problem? Well, there's probably not one single solution. More construction will absolutely help over time. Changes to zoning laws could increase housing density in certain areas. Faster permitting processes could reduce delays. Lower material costs could improve conditions for builders. And eventually, lower interest rates may improve affordability somewhat. But even then, this problem likely takes years to improve because housing supply cannot be fixed overnight. Homes take time to build. Infrastructure takes time to develop. Communities often resist major development projects, and conditions can shift quickly. What makes this situation especially interesting from an investing perspective is how many industries are connected to housing. Home builders benefit when construction activity rises. Building material companies benefit from new developments. Banks benefit from mortgage activities. Real estate companies benefit from transactions. Utility and infrastructure providers often benefit from population growth and expansion. Even retailers that sell furniture, appliances, and home improvement products are affected by housing activity. Housing sits at the center of a massive part of the economy, and when housing slows down, many parts of the economy feel it. But what's fascinating is that despite all the challenges in today's market, demand for housing itself has not disappeared. People still want homes, families still form, people still relocate for jobs, young adults still want independence, and over long periods of time, housing remains one of the most important parts of the American economy. The problem is that supply has simply not kept up with reality, and until that changes in a major way, affordability will likely remain a major issue for millions of Americans. I think one of the biggest misconceptions people have is assuming that the housing market is just expensive and things will eventually go back to normal. But what if this is the new normal for a while? What if higher construction costs, limited inventory, and restrictive zoning continue keeping pressure on housing for years? That could fundamentally reshape how people think about homeownership. It could mean more long-term renting, smaller homes, multi-generational households becoming more common, and different migration patterns across the country, and possibly even changes in what people consider the American dream. Because for generations, owning a home was viewed as a major milestone of financial stability and success. But today, for many younger Americans, that dream feels increasingly difficult to reach. And whether policymakers, builders, and communities can actually solve this housing shortage may end up reshaping the economy for decades to come. If you enjoyed the video, make sure to give it a like, subscribe to the channel, and let me know in the comments below. Do you think the housing shortage will eventually improve, or do you think that this is becoming a long-term problem in America? And we'll see you next time.